In today's video, I'll be telling you what I think are the 5 best index funds that Vanguard has to offer in 2024. I've been investing in the Vanguard Index fund for the last 5 years. Index investing, from my experience, is a safe way to start in the stock market. This is because your risk is spread across multiple stocks instead of with one single stock. Before investing into index funds, I would say you need an understanding of compound interest. So I'll kick things off with a bit of info on compound interest. Then we look at 5 index funds for you to consider in 2024. Compound interest is the 8th wonder of the world. He who understands it, earns it. He who doesn't, hears it, is a well-known quote from Albert Einstein. This is a big one. It's huge, and it's something you need to understand as an investor. Many people don't understand compound interest. It's not something you get taught at school. It's something you learn when you make the decision to educate yourself, when you realize the importance of financial literacy. And it's something I really wish I could go back and tell my 18-year-old self all about, because I would have invested every single month and with that knowledge, instead of starting in index funds 5 years ago as a 35-year-old. Compound interest can affect you negatively and positively. If you invest, compound interest is the interest earned on both the principal amount and the accumulated interest of an investment, or simply put, interest on top of interest. One of the most magical aspects of compound interest is its ability to turn a small amount of money into a large one over time. If you fully understand the power of compound interest, you will know it has the ability to significantly increase wealth. Compound interest isn't just for those with large sums of money to invest. It can work for anyone who starts early and sticks with it for a long term. So if you invest into index funds for decades and let compound interest do its thing, it's going to be good for your wealth. Let's move on to 5 index funds to consider in 2024. Number 1 is a product I really like, and that is Vanguard FTSE Global All Cap Index. With this fund, you get access to over 7,000 stocks, and the annual fee is 0.23%. In terms of risk, it's fairly high risk, and it's 5 out of 7, with 7 being highest risk. I like this fund's holdings. Currently, the top 10 positions include the likes of Apple, Amazon, and Nvidia. You're also getting a good mix as the fund provides exposure to large, medium, and small companies. One issue to be aware of here is that around 60% of the fund is allocated to the US stock market at the moment. This could be seen as having too much exposure to the US market. Let's say that in a given year, US shares didn't do very well. In this case, this fund would probably underperform. To look further into this fund, simply do a Google search and you'll find it on Vanguard's website. All I would say before investing in any index fund is to make sure you fully understand index funds. If you're not quite sure, see below for a video that will give you all the information you need. Number 2 is Emerging Markets Stock Index Fund. This provides exposure to around 1,500 large and mid-sized companies in emerging markets. So not quite as diversified as the previous fund, and it's also higher risk, as Vanguard gives it a risk rating of 6 out of 7. But I do like this product as it has a decent amount of exposure to China, like 30% of the fund. Chinese stocks are well off previous highs, so there is a fair bit of room for decent returns, in my opinion. Another plus is that it has a large exposure to India, and the Indian economy is booming at present. Both China and India are economic powerhouses, so getting exposure to both is a big positive for me. Again, if you want more info on this fund, look at Vanguard's platform online. In a long-term diversified portfolio, I do think this fund is worth considering. Number 3 is the Vanguard Target Retirement 2050 Fund. The Vanguard Target Retirement 2050 Fund is designed for investors who plan to retire around the year 2050. The fund's objective is to provide investors with a diversified portfolio of stocks and bonds that becomes more conservative over time as the target retirement date approaches. The 2050 fund provides exposure to over 23,000 assets, so this is hugely diversified, and this is a big plus for me. Risk-wise, it's 5 out of 7, and the ongoing charge is 0.24%. Again, if you want more info on this fund, look at Vanguard's platform online. The Target Retirement 2050 Fund is designed for investors with a long-term investment horizon. By investing in a diversified portfolio of stocks and bonds, the fund aims to provide investors with the potential for long-term growth and income. I think if you want to keep things really simple, this is definitely an option. The beauty of the Target Retirement Fund range is that you can choose a rough year, like 2050, 2045 or 2040 for example. This is dependent on your age and what your investment goals are. Number 4 is the Vanguard FTSE 100 UCITS ETF. This fund employs a passive management or indexing investment approach through physical acquisition of securities and seeks to track the performance of the FTSE 100 index. The index is comprised of large-sized company stocks in the UK. This gives you exposure to 102 companies, so not too much diversification with this one. It has an ongoing charge of 0.09% and a risk of 6 out of 7, so it's high risk. Again, if you want more info on this fund, look at Vanguard's platform online. I would potentially invest into this fund if I was bullish on the UK economy in a given year. Number 5 is the Vanguard Life Strategy 100 Fund. The Vanguard Life Strategy 100 Fund is designed for investors seeking a diversified portfolio with a high allocation to equities. This is the fund I've invested into for the last few years, and I've had a decent return. This fund gives you exposure to over 7,000 stocks. In terms of cost, it has an ongoing charge of 0.22%, and the low cost is what first attracted me to Vanguard Index funds. Risk-wise, it has a risk of 5 out of 7, so fairly high risk, which suits me as an investor because I intend to invest for the next 20 or even 30 years. Let's have a look at how it's performed over the last few years. The Life Strategy range has a few different options, like the Life Strategy 80 Fund, which is 80% stocks and 20% bonds. When I was doing my initial research, I was torn between the Target Retirement funds and the Life Strategy funds. So if you like the sound of any of the index funds from this video, do some further research and see if they are for you as an investor, based on your risk tolerance and your financial goals. Please remember that this video isn't financial advice, it's just information from me to you that will hopefully save you a lot of time. If you're not sure how to buy index funds or you want some more information, see below for a video that will help you to safely invest into the stock market with index funds.